Did you know that Warren Buffett, one of the richest men in the world, started with a modest $100 and turned it into billions? It's mind-blowing, right? But here's the kicker. He didn't rely on luck or some get-rich-quick scheme. Instead, he built his wealth with a mindset that anyone can adopt. If you've been struggling with money, feeling like you're stuck in a cycle of debt or unsure how to start building real wealth, you're not alone. It's tough out there, but what if I told you there's a way to break free and start building a solid financial foundation in as little as 6 months? The secret isn't in some secret formula or magical investment trick. It's all about consistently applying the principles that Warren Buffett has used his entire life. Imagine finally feeling in control of your money, building your savings, and even making passive income that works for you while you sleep. It sounds like a dream, but with the right steps, it can be your reality. Throughout this guide, you'll discover how small, consistent actions can lead to massive growth. You'll learn how to start thinking like an investor, cut unnecessary spending, and reinvest those savings into building real wealth. The best part? It's all about shifting your mindset, not relying on fancy financial jargon or complicated strategies. You don't need a massive starting point, just the right mindset and the willingness to take action. By the end of this, you'll know exactly how to get your finances on track and start building wealth like a pro. Ready to learn the same strategies that transformed Warren Buffett's life and helped him become one of the wealthiest people in history? Let's dive in. Invest consistently, no matter how small. When it comes to investing, consistency is key, no matter how small your starting point is. Picture this. A friend of yours starts putting away just $50 a month. It might seem like pocket change, right? But over time, with steady investments and compounding interest, that $50 starts to snowball. You might think small investments won't get you far, but Warren Buffett would argue otherwise. His advice? Keep the momentum going, and you'll be amazed at the results down the road. You don't need a fortune to get started. In fact, starting small can actually be an advantage. Many successful investors, like Buffett, didn't hit it big overnight. It was their daily, consistent investments that created their wealth. Whether it's stocks, real estate, or even setting up a retirement fund, the goal is to be in it for the long haul. When you invest a little bit at a time, you're actually building a habit, a mindset that says, I'm in this for the long run. This is the mentality that pays off. Think of it this way, $50 invested today can grow exponentially with the right strategy. Let's say you invest that $50 in a stock like Apple or Tesla. While they might not skyrocket in the first month, over a couple of years, that investment can grow as the companies grow. So, next time you think about skipping an investment because it's too small, remember, consistency is more important than size. The magic of investing small amounts consistently is that you're setting yourself up for passive income down the line. Sure, it won't pay off tomorrow, but what about 5 or 10 years from now? Imagine the dividends, the returns on that small, steady stream of money you've been putting away. That's how real wealth is created, slowly and steadily. So, if you're feeling like you don't have enough to start investing, think again. Even a tiny investment today can be the first step to financial independence. Don't wait for the perfect moment or the ideal amount of money, start now. After all, it's not the size of the investment that counts, but the habit you build around it. And once you start, you'll find that consistency becomes its own reward. Focus on long-term growth, not short-term gains. When it comes to investing, a lot of people get caught up in the hype of quick wins. They want to know how to make money fast. But here's the thing, short-term gains are like a sugar rush, exciting in the moment, but they fade away quickly. Warren Buffett, one of the richest people on the planet, has always been a big advocate for long-term growth. He doesn't play the market for a quick win. He plays the long game. So, if you want to build real wealth, stop obsessing over today's stock price and start thinking about where your investments will be in 5, 10, or 20 years. The magic of long-term investing is that it allows your money to grow naturally. Imagine this: you invest in a solid, stable company today. That company might not see massive gains right away, but it's steadily growing, expanding, and increasing its value. Over time, your money grows with it. And that's the power of compounding. The longer you hold your investments, the more they'll multiply, often in ways you can't even predict right now. This is the kind of wealth-building mindset that turns small investments into significant returns over the years. Instead of checking your stocks every day, focus on the bigger picture. Ask yourself, is this company on track for growth over the long haul? If yes, then hang tight and give it time. One of the worst things you can do is panic when the market dips. When everyone else is selling, that's when you should be looking for opportunities to buy more. Buffett has famously said, "The stock market is a device for transferring money from the impatient to the patient." If you can stay calm and stick to your long-term strategy, you'll be ahead of the game. In practice, this means investing in companies that align with your long-term goals and values. For example, consider tech giants like Microsoft or sustainable energy companies. These industries are expected to grow and adapt over time. By investing in companies that are evolving with the world, you're positioning yourself to benefit from their long-term success. It's about looking beyond the noise and focusing on where the world is heading in the next few decades. So, next time you're tempted to sell an investment because it didn't make you a quick buck, stop and think about what you're really after. Long-term growth isn't always glamorous, but it's sustainable. And once you realize the power of compounding and staying the course, you'll see that the journey to real wealth is not about speed. It's about consistency, patience, and a long-term vision. Avoid the temptation to follow the crowd. When it comes to investing, one of the hardest things to do is ignore the noise. We live in a world where everyone's got an opinion, and if you're not careful, you might find yourself following the crowd just because it seems like the safe thing to do. But here's the thing, Warren Buffett's advice is crystal clear: be fearful when others are greedy, and greedy when others are fearful. The crowd is often driven by emotions, and when emotions take over, that's when you should step back and reassess. If you're always following the herd, you're not leading your own financial future, you're letting the crowd dictate it for you. The temptation to follow the crowd is strong, especially when the market is buzzing with excitement about a hot new trend or a can't-miss opportunity. Everyone's talking about it, everyone's jumping on board, and suddenly, you feel like you're missing out. But more often than not, these hot tips and guaranteed profits end up being short-lived fads. Think about the dot-com bubble or the cryptocurrency craze. In both cases, people rushed in because they didn't want to be left behind, only to watch their investments crash. The key takeaway? Don't let the hype cloud your judgment. Instead, stay focused on your own strategy. If everyone is rushing into a stock because they think it's the next big thing, take a step back. Do your own research. Do you really understand the company or the product behind the trend? If not, it might be time to sit this one out. By staying disciplined and sticking to what you know, you'll avoid the rush of panic buying or selling and instead make decisions based on logic, not fear. Let's put it this way. If you're always chasing the next trend, you're gambling. But if you're investing based on solid research, patience, and a clear vision for the future, you're building real wealth. One way to avoid the herd mentality is to diversify your investments. Don't put all your eggs in one basket. Look for opportunities that align with your long-term goals. Whether it's real estate, stocks, or building a passive income stream, having a diversified portfolio means you're not at the mercy of the crowd. So, next time you hear about the latest investment craze, ask yourself, is this really the best move for me? Be brave enough to trust your instincts and stick with what you know works for your financial future. The crowd might be screaming, but you're the one making decisions that will pay off in the long run. And once you get comfortable with this mindset, you'll be much more confident in your ability to navigate the ups and downs of the market. Understand what you're investing in. One of the most crucial pieces of advice Warren Buffett has shared over the years is simple but often overlooked: only invest in things you understand. It's easy to get excited about an investment opportunity, especially when everyone's talking about it, but if you don't understand what you're putting your money into, you're asking for trouble. Think about it. How can you make smart decisions about something if you don't know how it works or what drives its value? The first step to building wealth is understanding your investments. Understanding what you're investing in goes beyond just reading a few headlines. It's about digging deep, researching the company's financials, its products, its management, and its long-term potential. Let's say you're thinking about investing in tech stocks. Do you know how the company makes money? Do you understand its competitive edge in the market? If you can't answer these questions with confidence, then it's time to pause and dig a little deeper. Investing without knowledge is like walking into a dark room without a flashlight. You don't know what's ahead, and it could lead you straight to a pitfall. Real-world example: imagine you're thinking about investing in a new tech startup. Everyone around you is raving about its product, but do you understand the technology behind it? Is the product scalable? What's the potential for long-term growth? These are the kinds of questions you need to ask yourself. Don't just go with the hype or what other people are saying. Take the time to research, ask questions, and fully grasp the potential risks and rewards. Knowledge is your best tool when it comes to making smart investment decisions. This principle applies not just to individual stocks or businesses, but to entire industries. For example, let's say you're interested in real estate. Do you understand how property values fluctuate based on market conditions, interest rates, and local demand? Or are you simply attracted to the idea of owning property because it sounds safe? By understanding the mechanics of the market you're entering, you can make smarter, more informed choices that will help you build wealth without risking it all on a whim. As you dive deeper into the world of investing, remember that knowledge is power. The more you understand, the better equipped you'll be to make decisions that align with your goals and your financial future. And the more you stick to what you know and truly understand, the more confident you'll feel in your investments, no matter how the market moves. Once you realize this, you'll be ready for the next big leap in your financial journey. Cut unnecessary expenses and reinvest the savings. Warren Buffett has always been a huge advocate for frugality. He doesn't believe in living large just because you can. He believes in living smart. Cutting unnecessary expenses is the key to freeing up more of your income to reinvest in opportunities that will grow your wealth. When you reduce your spending on things that don't add long-term value, you create space for your money to work harder for you. Think about how often we spend money on things we don't really need: subscriptions, dining out, impulse buys. These small, seemingly insignificant expenses add up quickly. For example, if you're spending $50 a month on streaming services you don't use, that's $600 a year you could be reinvesting into something that has the potential to generate more money, like stocks, real estate, or building your own business. The key is to be mindful of where your money is going. Start by tracking your expenses for a month. You might be surprised by how many little purchases add up to big numbers. Once you identify where your money is leaking, make a conscious effort to cut back on the non-essential stuff. That money is better spent on things that will improve your financial future. Buffett's approach to money management is all about efficiency. The less you spend on unnecessary things, the more you can save and invest. By reinvesting those savings, whether into the stock market, real estate, or even your own business, you're creating a cycle of wealth building that will pay off over time. Every dollar you reinvest is a dollar working toward your financial independence. The best part? Reinvesting doesn't always require big amounts of money. Start small and consistently put money toward your investments. Over time, those small efforts will compound into something far more significant than you could have imagined. This habit of reinvesting your savings will set you up for long-term success, ensuring that your wealth is always growing. Build a strong network of advisors. Warren Buffett has often said that one of the keys to his success is surrounding himself with smart, reliable people. It's easy to get caught up in the idea that you have to do everything alone, but the truth is, building a strong network of advisors can make all the difference. Whether it's financial experts, mentors, or peers, the right team will provide valuable insights and guidance to help you navigate the world of investments and wealth building. Having a team of trusted advisors doesn't mean blindly following their advice. It's about collaborating with people who bring diverse perspectives and expertise to the table. Maybe you need a financial planner to help structure your investments, or a mentor who can provide insights on business growth. These advisors help you make more informed decisions and avoid costly mistakes by offering their expertise in areas where you might not have experience. For instance, if you're considering investing in real estate, a mentor who has been in the game for years can provide insights that you might not find in textbooks. They'll help you understand the market trends, spot good deals, and avoid common pitfalls that rookie investors often make. You can apply this same principle to other areas, like stock investing, starting a business, or even personal finance. Networking doesn't have to be formal either. Sometimes the best advisors are people you meet through casual connections, friends, colleagues, or fellow investors. Attend seminars, join financial communities, or even take part in online forums. By building relationships with knowledgeable individuals, you'll open yourself up to new ideas and opportunities that you might not have otherwise encountered. The goal is to create a network that works for you, one that helps you make smarter decisions with your money. With the right advisors in your corner, you'll feel more confident moving forward in your financial journey. And as your network grows, so will your wealth. These relationships will continue to pay dividends for years to come, turning your investments into a solid foundation for your future. Develop a wealth mindset over time. When Warren Buffett talks about success, one of the first things he mentions is mindset. The way you think about money has a massive impact on how you manage and grow it. Developing a wealth mindset isn't about getting rich overnight. It's about building a foundation of patience, discipline, and long-term vision. If you're focused on instant gratification, your financial journey will always be a struggle. Buffett's mindset is rooted in the idea that wealth comes from making smart, informed decisions over time. It's not about taking shortcuts or trying to beat the system. It's about understanding the value of patience and discipline. For example, if you're looking at investments, it's important to think long-term. The stock market might fluctuate, but if you focus on holding quality investments, your wealth will grow steadily over time. One way to start developing a wealth mindset is to get clear on your financial goals. What do you want to achieve in the next 5, 10, or 20 years? Once you have a clear vision, it's easier to make decisions that align with that vision. Whether it's investing in real estate, growing a business, or simply building passive income streams, your mindset should always be focused on long-term growth, not quick wins. A great way to foster a wealth mindset is by reading books and listening to podcasts that reinforce the ideas of financial independence, value investing, and self-discipline. Books like Rich Dad, Poor Dad by Robert Kiyosaki or The Intelligent Investor by Benjamin Graham are filled with timeless wisdom. They teach you how to think like an investor, not just someone looking for the next fast buck. The most powerful thing about developing a wealth mindset is that it doesn't just impact your finances, it shapes your entire life. As you learn to think long-term and make deliberate choices, you'll notice how your mindset shifts toward patience, perseverance, and smart decision-making. And once that shift happens, it'll be the foundation for your lasting financial success. Now that you've got the blueprint for building wealth, It's time to put it into action. The next step is entirely up to you. Will you take control and start applying these principles to your life? Remember how overwhelming it felt to feel stuck in financial uncertainty? You're already on your way to breaking free from that cycle. The knowledge you've gained here is just the beginning, but it's up to you to take that next step and turn it into something real. If you're serious about transforming your finances, don't wait another minute. Hit that subscribe button and turn on notifications to keep learning how to build the life you've always dreamed of. You've started the journey, now let's make sure you stay on track. And if you're ready to go deeper and unlock the full potential of these strategies, I've got something for you. Check out the material in the pinned comment to learn exactly how to create passive income streams, eliminate debt, and maintain mental clarity under financial pressure. This isn't just about knowing what to do, it's about getting a step-by-step plan that's tailored to help you succeed, no matter where you are in your financial journey. Don't wait for the perfect time, now is the time to take action. Click the link in the pinned comment and start transforming your finances today. It's your time.